Tyler, people are emotional. You hear that? That makes me more bullish.
You're more
Why
bullish.
more bullish?
Well, because I think people, by and large, Melissa, have been trading with this and not trading with this. I mean, these are great theories that we talk about with respect to the professor, but how do I invest through this? We still have the greatest tech companies in the world. What's happening in Facebook and Google are a textbook, if you want to write a textbook, on how companies grow. They grow way too much too fast. They didn't have the systems in place with respect to compliance and all of this. Now they're getting in trouble. They've tripped. But what I would caution investors is this, is that from our perspective, terms like regulation and things like that are scary terms. I do agree that there could be something happening with respect to Europe first, relative to the United States, but anytime you want to get the government involved with respect to companies, that's a little bit shaky. So the free markets work for a reason, and these companies with respect to technology have some of the strongest balance sheets, strongest cash flow, and most discernible earnings in the world, so they're going to weather the storm.
Is the regulatory risk the reason why the stocks are down today?
I think so, and I think Facebook clearly has been the poster child. And Facebook doesn't have just issues with respect to regulation. They have issues with respect to user in their traditional business.
We're watching Jack Dorsey arrive for his hearing on the House side in front of the committee there. That's the Rayburn House Office Building. Finish your thought.
The bigger issue with tech, quite frankly, Tyler, is that over the last couple of years, investors have become too reliant on the sector for returns. And there's not a lot of original thought. Everybody owns the same stocks. And that's a big problem for us. And that's why, from a stock picking perspective, we're still very bullish with respect to value, financials, industrials, companies that are growing their earnings.
And then you're underperforming the market this year.
That are underperforming the market this year, but just wait, Melissa, it ain't over yet.
Just wait, Brian.
Here we go.
I want the 10% return on the S&P 500. I don't want some underperformance because you're in financials, industrials, and the other unloved things out there.
Yeah, this year, but what about in the last couple?
That's a hard line to take.
It really is a hard.
Somebody who manages money or tells clients what to do, and they are underperforming the markets at record highs.
It is a hard line to take, but all of our portfolios that we run in real live money are actually dramatically outperforming the market, for the record, number one. Number two, the last couple of months in particular, we've seen massive recoveries with respect to financials and industrials. Those two areas have actually been under-owned relative, and I think some of this weight could come out of tech near term, but we have another issue with respect to volatility in the new communications sector coming out later this month, which will cause some people to be worried about where their positioning are. But I would caution other people to say, listen, there's still 500 stocks in the S&P 500, okay? Let's not go crazy with respect to this new sector and really move things around so hard that you're going to cause too much excess volatility.
Why are you